folks, Dan Frio here, the Mortgage Update. And what happened today? Well, it's kind of, I'll be blunt. I'm completely confused on what's going on. And let me explain why. The stock market keeps going up. So, as I always say, if you have $2 to invest, let's make it a little simpler. You got $100 to invest. You want to invest in the stock market when everything's booming. Or you want to put $50 in the stock market, $50 in bonds, whatever. We got the stock market going up. Normally, it makes the mortgage-backed securities or the bond market drop. And they're basically an inverse relationship. When one goes up, the other goes down, and accordingly. Or they'll both basically kind of be in limbo. Well, today we had the stock market up 80-something points. And it was up big yesterday, and I apologize. I had a big realtor event in Chicago yesterday that I spoke at. But the market was way up yesterday. MBS market was 0. Today we have the market up 88, and the MBS market is up 5. I don't get it. I'm just being honest. Sometimes we're just confused. So let me tell you who I am. My name is Dan Frio, the Mortgage Update. I'm in Chicago. I'm a mortgage advisor, have been for over 32 years. You can hear me in Chicago on WYLL radio as well as WIND radio. I'm on WYLL, it's a Christian radio station. I'm on there every night from 7:30 to 8 p.m., Monday through Friday. And I'm on WIND radio on Saturday mornings from 7 to 8 a.m. So what I do is I discuss about the stock market, the investments, but basically, I'm a mortgage advisor, so I watch or monitor mortgage rates in the economy and the things that affect or will affect the mortgage rates in the stock market. Why do I watch both? Because they're correlated. Like I said, normally you have two investment tools. You could go in stocks, bonds, or a combination of the two. So I try to figure out where the money's moving so I can kind of predict where mortgage rates are going to go. Because the more money that flows into bonds, it drives up the price and drives down the rates. So right now we got money flowing into stocks and we got money flowing into bonds. I think everybody is just fully leveraged out there. That might be what we come and see. There might be a lot of people buying on margin. They're putting cash into bonds and using margin for stocks. I don't know. But you know, I had a luncheon with Steve Cortez, and he's on WIND radio. He's also a CNBC contributor, a Fox News analyst. I had lunch with him today, and we talked about a lot of this stuff. And check him out. He's on WIND radio in Chicago from 5 to 7 every night. Great guy. And he's a Trump. He knows Trump personally. He meets with him often. He was in the White House. He's the reason I asked him, I said, dude, why do you do CNBC or CNN? You get pounded every time you go on there. And he's basically, Trump wants me to do that. He wants me to be his voice of reason when it comes down to all this stuff. So that being said, I'm like, so what's going on with the economy and everything else? So we had a long, lengthy dialogue, and here's where we were about a month or two ago. And you might say, you know, Dan, I've been watching you or follow you every night. You've been saying, you know, employment numbers aren't great, manufacturing numbers aren't great. The freight index is another area that we follow. It isn't great. It's actually down, I think, every month for the last year. And the tariff wars are creating some uncertainty, and the impeachment was creating uncertainty, and I thought the market was overvalued. I still think the market's overvalued. However, that being said, in the last couple weeks, a lot of things are turning. So let's go to, for example, you know, here's some headlines for the markets, what's going on. Well, let's go back to here. We got now employment numbers. Well, there's employment numbers and then the unemployment numbers. So employment numbers are increasing. They actually came out. There's more numbers coming out tomorrow, and that's kind of gonna play or dictate a big role in what happens in the market. A lot of people are sitting on the sidelines right now to see where that is. But Wednesday there was a report that came out, and it was basically almost double what the economists were expecting in job growth. I mean, we don't know if it's a hiccup or a blip or whatever. So that's actually phenomenal right now. Then you have the manufacturing numbers, which are going up. They're also starting to really increase. The freight index hasn't come out yet this month, but you know, let's say that's a negative, but that's one negative out of all these. The tariff wars, they settled with stage 1 with China, so that's okay. Now China just came out and said they're going to reduce tariffs on 50% of our products. That's also great news. So is the stock market still overvalued? I don't know. And I know that's not what you want to hear, but I'm just being honest with you. I'm not going to go out there and say, yeah, this is what's going on. Buy this and do this and do this. And then all of a sudden it turns around and it's like, oh, sorry, I was wrong. I'm actually telling you, I don't know. Because it's an anomaly how the stock market's going up. The mortgage rates are going down. It doesn't correlate well. So what I'm doing is I'm actually staying right in tune every day, all day. And if I see, a big conversion or inversion of rates, I'm going to start locking. We got about $12 million in loans sitting there unlocked. So if I see a blip in the radar where the rates start to really move up, I'm going to start jumping in and locking everybody. Here's some news right here. Rate volatility starts to level off, but the big question here is the job reports numbers coming out. So let's go back to here. We went through the unemployment numbers. That was good. The ADP job numbers are coming out tomorrow morning. We're going to watch that in very much detail. But let's go. Here's what I just already put in my line. So this is actually the chart of the mortgage-backed securities market. And if you watch me every day, you know what I'm talking about. We here on the channel follow the mortgage-backed securities market. This is a bond that trades, that determines or dictates, or it's the calculated investment on how mortgage rates are created. And here's the trend of where we're going right now. And I always say, and I say this probably every day, pigs get fat, hogs get slaughtered. Let's not try to be hogs. Meaning, on a stock, if it keeps going up and up and up and up and up, eventually it's going to turn and go down. It will never, ever, ever just keep going up forever. I might be wrong on something, but normally it doesn't. So we watched some figures in here. This is the technicals, or this is the chart of what's going on with the mortgage-backed securities market. This dictates the price of the bond. Okay, as the bond price goes up, the more you pay for a bond, the lower the yield is on that bond, meaning the lower the rate, the lower the mortgage rate. So we love seeing this number go up, the price of the bond going up. So the price has been going up and up and up and up and up. And right here, I said, I'm starting to see, we just hit this line, and what these two lines are, we call them the Fibonacci levels. And basically they're bumpers that most things trade between. So think of them bumpers when you're bowling. You're a little kid, you're bowling, and it bounces back. So in a normal market, an average market, things just really don't change much. The technicals are going to bounce between these levels. So we hit a bottom here, we hit a top here, and we're bouncing here. So I actually created this line right here, and this is the trend line. And again, nothing always goes straight up. So I'm thinking, okay, there's going to be a blip in the radar. So right in here, I predicted that we're going to kind of float down into this area, which we did. So now where are we at? Well, I put in some additional lines. We topped off here, and you can see we topped off. We basically bumped it there, and bumped it there. So this creates another little tight level. And then we hit a top here, a bottom, a bottom, a bottom. So this is now creating a little bit tighter trend line. Okay, so if there was no news coming out tomorrow, we would probably bounce back in this range and stay stagnant. But the employment numbers are coming out. And if they come out very well, I think the stock market on Wednesday, the increase in the stock market was due to the employment numbers that came out. I don't think we're going to have that much of another rally tomorrow. However, we're not in normal times. There's euphoria in the market, and I saw this in 2000. The euphoria, people just keep dumping money in. They kind of blind themselves of, I'm getting a 20 or 30% return on my money. I'm just going to keep riding this. Eventually, it's going to end. Take some money off the table is all I'm saying. So that being said, the numbers I think are going to come in pretty good tomorrow. I don't know if they're going to blow the numbers away like they did on Wednesday, but they could. And if they do, we could possibly see another drop in rates, a drop in price, which is a bump up in rates. But I think we have a little bit tighter technicals. So if we drop, I think we're going to drop into this range. If the number doesn't come out as great, you might see people moving money out of stocks back into bonds, and we could go up. We're hitting this ceiling. So I'm seeing that basically, if nothing really happens tomorrow, I'm going to say we're going to end in about this range here, which is basically stagnant from where we are today. It's not a normal market, and I hate to say that, but I'm just being honest with you. So I'm going to sit and watch the numbers come in tomorrow. I haven't locked in anybody, but I'll be at my computer first thing in the morning, ready to lock if there's a bump in the radar. So I'll let you know. I'll post a morning report, just letting you know one way or another what the number came out as and what it's doing to the MBS market. So that being said, if you like the channel, please, if you like the video, please don't forget to give me a thumbs up. Hit the subscribe now button down below. Hit the bell too, so especially if you're a realtor or mortgage advisor, I can pop up on your radar every time I post a video. I try to make them short, sweet, and to the point. Give you the facts behind things, not bore you to death on a whole bunch of other stuff. So hope you like what you see. Tomorrow too, we got a lot of new cameras coming in, and maybe backdrops and some other things. So it might be the quality might go up a little bit. Should go up quite a bit because I just spent a bunch of money on a bunch of cameras and lighting and microphones and so forth. So I hope you like what you see. I hope you like the backdrop. This is my new office. And if I could be of any help, let me know. I work with about 2/3 of the country. And I'd love to help you. At least give you a quote or get you into a program, get you pre-approved, help you in any way I can with mortgages. If you'd like to reach out to me, call me at 844-775-LOAN, and loan is 5626. You can reach me there, or shoot me an email at D for Dan Frio, which is F-R-I-O, so D Frio at parksidelending.com. Or visit me at thefrioteam.com, and you can actually apply there online, and we'll get right as soon as you're done. I say it, we'll immediately call you just to go over your application, answer any questions you have, and explain to you what program we would get you into and why, and all the good stuff. I don't like it where everything is just techie behind the scenes and you don't ever get to talk to anybody. So most of the time you'll talk to me. If not, you'll talk to a team member of mine, but I'm still here in the background. I review every file that comes through. And I try to make a phone call to each person as well, just to thank them for watching us, checking us out, and using our services, because you make this all possible. So God bless. Take care. Have a good night. And I'll see you tomorrow. Bye-bye.